Hey, good morning. Let's go over today's trade plan. So these last few days are still, for the most part, holiday sessions because the volume is running very light, and we're heading into New Year. It's end of year. There's really not a whole lot going on. Bigger picture, we know that the buy side is in control. Short term in the overnight session, we've seen sellers be a bit more dominant, and we've pulled back a bit off of the all-time highs, but that is not going to affect the overall bullishness of the market heading into these last few days of the year. And that's why any pullbacks can still be traded on the long side as long as you're getting some decent location. Now, heading into today, we have initial support at 74 quarter to 76 quarter. It is a level that has already provided a reaction in the overnight session, so if it goes back down there, it does call for a bit of caution because we could at that point be heading down towards the naked VPOC at 71.75 and the open gap at 72.5 before the buyers step in. But that 74 quarter, 76 quarter is active support until broken. So it's an area where buyers can still defend off the open. On the upside, the main objective is the 82 to 84 area, which is also the gap fill. And beyond that, we have the prior VPOC at 85.5, and then finally the primary resistance at the all-time highs at 86.75 to 88.75. But if you're trading it on the long side, the safer target is 82 to 84, not necessarily shooting for a move back up to the all-time high or a break of it. Of course, that can happen, but the higher odds upside objective is 82 to 84. So if you're not getting good enough location, then it may not really be worthwhile to enter long in the middle of the range, because there could still be a lot of rotation, a lot of balancing that happens here. There's really no major catalyst due today, so today could be a very sideways session, especially given the light volume. So trade location is going to be very important if you're trading this. Either you get good location that gives you a good enough target and good enough reward to risk to take the trade, or it's better to sit out and wait for a better spot, because again, this could quite easily go down to that 71.75 and 72.5 naked VPOC and open gap before turning around, and potentially even down to 67.69. So again, if you're getting good location that's giving you good risk reward, then it's worth putting on the trade. Otherwise, given that it's still more or less a holiday market, it's a light volume market for sure, doesn't really make a whole lot of sense to get very aggressive in these last few days of the year. So those are really the main thoughts heading into the open. We'll just be watching to see whether the buyers are able to hold it at 74 quarters, 76 quarter. If not, responsive buyers can still be active at the support levels below, because overall this is still a very bullish market, and any pullbacks into good support spots can still attract buyers. They can certainly still provide a tradable reaction. On the upside, 82.84 is the primary objective, with 86.75 to 88.75 being the all-time high area, and an area that can certainly cap the upside. Above it, there is no hard resistance because that would be above the all-time high, so there's really no point to covering anything above that area. But given the weakness that we've seen in the overnight session, the initial resistance zone can certainly cap the upside, and even the 82 to 84 can attract sellers on first test. And if we break through 82 to 84, then that you're back into more of a stronger, intraday market, and we could be heading back up towards the all-time high. So those are really the main thoughts. Let's see how well the buy side holds it up, and we'll take it from there.